There's no counterparty risk because you hold it and own it. It's not a contract. It's a tangible asset that also has the broadest base of buyer. These are all based on the full faith and credit of the government. That's a counterparty risk. What about, well, we see what just happened with FTX, right? And the cryptocurrency debacle that's still continuing to play out, and it's like dominoes falling. But you don't have that with gold. You don't have that at all with gold because you hold it, it's in my possession, and it's in, for all intents and purposes, even though you can see it right here, it disappears. I own my own vault, and again, you know, gold held at home runs no political risk because they can't see it, right? Even though it's real and it's tangible, once it's out of the system, it is invisible to them. Central banks have bought more gold this third quarter alone in 2022 than they ever have in history. And what the central banks are really attempting to do with CBDCs is make absolutely everything you do visible and controllable by them. But this isn't. And that's why they're accumulating it, because they want to stay in power, but they're not going to tell you about it. They're going to do what they can by pushing down the price so that you think, oh, well, gold isn't really, even though it really did outperform pretty much everything last year. But still, why would you want it? No, you don't want it. So, but yeah, gold held at home, it's invisible to them. They can't control it. They can only control through perception management how you think about it. But once you know the truth, they've lost you, like they've lost me. Whereas you look at gold and it's used in every single sector of the global economy. So 100% of the time there is demand, maybe more, maybe less, but it doesn't go to zero because there's always the broadest base of buyer. And when you're talking about the Bank for International Settlements, when you're going into a fight, what do you want? You want one little wimpy tool that boop can evaporate like that? Or do you want an arsenal? This is an arsenal in a teeny weeny package. It's whoever holds the gold, you're actually holding real wealth that's completely marketable. And you did see what's happening in Ghana. So, I mean, they're accumulating gold because nobody wants their currency. So what are you going to do as an individual when nobody wants the currency? You better have barterability and real wealth, because the other part of that are the opportunities that always present in crisis. But you have to be in the right place at the right time with the right asset. If you've got something that nobody wants, you have nothing. It is a tier 1 asset. So it's the safest thing that you can do. And how many people talk to you about when the stock market is going down, that the spot gold market goes down too, right? And why is that? Because if you have borrowed to buy those stocks and they are going down, you're going to get a call from your stockbroker. We need you to deposit more money. So maybe you have to sell something off. And it's not whether or not this is what I want to sell. It's what will the market buy, right? So yes, again, it goes back to the fact that it's used globally in every single sector. It's the most liquid asset that there is because it runs no counterparty risk, right? And it has the broadest base of buyer. So yes, and I actually, I was able to use my gold really as collateral for a short-term loan. So sometimes that's hard to do, but banks would rather have this than, call them up and say, hey, I've got some shares in FTX. Let's see if they'll, right? So they can create a whole bunch of gold that does not nor ever will exist. So in the short term, anything is possible, right? They can create, I mean, didn't you say, weren't we talking about a deficit in the physical market earlier? Well, if the spot markets, whether they're gold or silver, actually reflected the true deficit for gold or silver, the prices, if it was a true free market, would be a lot higher. So, and again, a rising gold price is an indication of a failing currency. Governments and central banks do not want you or I to know that the currency is failing. And the other piece that I would like to kind of throw in here, and that is we all work. I mean, the reason why we have money to begin with is so that a society can specialize. And you have a farmer, you have a baker, you have a lawyer, etc. And so they needed a tool to make sure that you're always fairly paid for your labor. And that's why gold became the primary currency metal, because it's the only one that actually does it. So you have your gold and you're trading your labor for somebody else's labor, which is a fair exchange. But no matter when you use it, you will always be fairly paid for your labor, although not with the spot market. And by the way, the CBDCs recently, I don't know when they changed this, but I could tell you I was very troubled when I saw it. I was preparing for some event and I went in and looked at the functions of gold and at the treasury, because I wanted to, capture that image. And they removed the short-term store of value because dollars, government money through inflation robs you of that. So it forces you to take risk so that you can maintain what you already worked for. There are so many different ways that they can do this restriction as well. But once we are in full digital form, I mean, the central banks are talking about being able to tweak the money constantly. Oh yeah, I'm real comfortable with that one. I mean, are you kidding me? And they want to remove all of the functions of money and take it down to two, which is just a tool of barter and a tool of measure. Forget any level of holding value because they want to take us into a negative. Look, they've inflated all the purchasing power value of the currency away. They have to attack principal. That's what negative rates are about. And they keep talking about no limitations on how deeply. So now you get paid. And as soon as you deposited it into the bank, it's less than when you got your check or the deposit, because you won't get a check. It'll go directly in. You tell me why that's okay with me. I'm not even going to be able to get paid fairly for my labor. And I wasn't getting paid fairly to begin with because of inflation.